Good morning, folks. Another day, another dollar. Today is Wednesday, and these are the top 5 things to know today in financial markets. Kicking things off with number 1, a drop in the number of new coronavirus cases in China is lifting sentiment across global financial markets this morning. We saw China report 1,749 new confirmed cases of coronavirus as of Tuesday, which is down from 1,886 new cases reported the day before. That was also the lowest total since January 29. So really, we're seeing a positive movement in the downwards trending of the number of confirmed cases. However, with that being said, China also reported 136 new deaths, taking the total death toll to more than 2,000. So really, markets seem to be taking things on a calmer note so far. With that being said, the situation can flare up at any moment, so keep your eyes on any headlines which might arise on this front during the session. On to number 2, markets on Wall Street are pointing to a stronger open this morning. The Dow was set to rebound from its 2-day losing streak. Dow futures currently pointing up by around 65 points. With that being said, expectations of more policy stimulus from major global central banks, mostly specifically speaking about the People's Bank of China and the Federal Reserve, is underpinning sentiment and lifting appetite for riskier assets. On to number 3. Speaking about lifting appetite for riskier assets, Tesla shares are up 8% in pre-market trade, taking the stock to the $930 level. We're getting closer to the 1,000 mark. The rally in Tesla has been just unbelievable so far this year. Shares are up 110% so far this year. We don't see really much of a specific reason for this rally in pre-market. We did see a price target on Tesla to 928 over at Piper, street high. However, a move of this magnitude really indicates that perhaps a short covering rally is still in effect. So if you're a bull in Tesla, enjoy the ride. If you're a bear, my condolences. On to number 4. In commodities markets, gold prices are not telling the same story as stocks. Perhaps more of the safe haven plays. Prices are trading at their highest level since 2013, indicating that there is fear in the market as a result of the coronavirus. In addition to that, we're also, like I said, expectations of more monetary stimulus from major central banks is also boosting demand for the yellow metal. Gold prices have been up 5% so far in 2020. So we'll see if the seasonal trading gold continues. Number 5. On the data front, the Federal Reserve will release minutes from its late January policy meeting at 2 p.m. Eastern Time. We'll be keen to see if there's any hints or indications there on the central bank's plans for interest rates for later on this year. More and more investors in the market are starting to price in at least one rate cut from the Federal Reserve later this year, which is something the Federal Reserve as of now is not forecasting. So keep your eye on that as well. That's it for me. May the trading gods be with you. Have a good day, everybody.